So our new government has been appointed and the Prime Minister Keir Starmer has started to make some changes to legislation. But what can we expect in terms of tax changes? My name is Jack Rivers and welcome back to our channel. Today I'm going to be talking about a topic that's been on everyone's mind, the upcoming tax changes under the new Labour government. Whether you're a business owner, employer, or just someone wondering how your payslip will be affected, these changes are going to impact you one way or another, so let's dive in. Firstly, let's talk about personal tax. Labour have no plans to increase income tax in the next government, though they have confirmed that they will continue with the previous government's plan to freeze the income tax thresholds until 2028. This would effectively raise income tax over the years because while wages will rise with inflation, the thresholds won't change. This means that more people will slowly be pushed into either paying tax or paying it at a higher rate. This is known as fiscal drag. Similarly, there will not be increase in national insurance, but the thresholds will also remain frozen until 2028. Labour has also pledged to abolish the current NonDom Tax status. This scheme allows people living in the UK whose permanent home, known as their domicile, is outside of the UK to avoid paying UK tax on income earned abroad. The purpose of this is to provide tax relief to people living here temporarily, and it has also made the UK an attractive destination for wealthy individuals to live and work. Although there are many rules around this status and not all non-DOMs avoid paying UK tax, a significant number use the scheme to avoid paying tax, even if they have no intention to return to their country of domicile. The Prime Minister plans to reform this system to make the conditions more strict so that anyone living in the country for more than 4 years will be taxed the same as anyone else, effectively raising £2.6 billion over the course of the next Parliament. A significant change Labour plans to introduce is ending the VAT exemption on private school fees. Currently, private schools don't charge VAT on top of their fees, which average £15,000 per year across the UK. This is a legal exemption in place for organisations providing education. The goal behind ending the exemption is to use the extra VAT received by the government to pay for 6,500 extra teachers in state schools. This may cause a small proportion of private school pupils to be squeezed into state schools due to increased private school fees. However, removing the exemption does not necessarily mean fees would go up by the full 20%. It has been estimated that the effective VAT rate for private schools would be closer to 15% because the first time they will be able to reclaim the VAT they pay on their expenses. Next up, I'm going to discuss changes to payroll which will impact employers and employees alike. The government is planning several reforms to employment law. They aim to end one-sided flexibility by banning 0-hour contracts and ensuring that everyone has the right to have a contract that reflects the number of hours they regularly work, therefore providing more stability to UK workers. The new contracts would be based on a 12-week assessment period. If you work regular hours during that time, you would then be entitled to a permanent contract. However, should you prefer more flexibility, you can choose to remain on the initial flexible contract. It has been confirmed that there will be nothing in the new legislation that would stop employers from using overtime or taking on workers seasonally to fulfill demand. Another planned employment law change is making unfair dismissal protection a day one right for all employees. Currently, workers are only entitled to unfair dismissal protection after 2 years of continuous employment, meaning employers can dismiss employees without needing a fair reason to do so. This can be exploited, leading to employers being let go without valid reason and unable to take the matter to an employment tribunal. However, the current rules also allow employers to assess an employer's capabilities within this period and make cuts without significant cost or risks. With the new rules, this could mean employers need to be even more picky about their hiring decisions, though Labour have said that employers will still be able to implement probation periods. Also along these lines, Labour are looking to make statutory sick pay a basic right from day one. This would mean removing the 3-day waiting period before SSP can be paid and also removing the wages threshold. Currently, you must earn an average of at least £123 per week to be eligible for statutory sick pay. 70% of all sick days do not qualify for SSP as they fall within the first 3 waiting days, so these changes will be a significant cost for employers to bear, but workers would benefit from the increased wage stability. The final significant change affecting employers and employees is changes to the minimum wage. Labour have labelled the current age bands for minimum wage discriminatory and have pledged to remove them so all working adults receive the same minimum wage. This will directly impact workers aged 18 to 20 who are currently entitled to a lower rate. It is not yet clear if this will also impact apprentices over the age of 18. Additionally, the new government plans to calculate the minimum wage based on the cost of living as well as the other factors currently used, potentially raising the minimum wage for everyone. While these changes will ease cost of living pressures on workers, they may negatively impact small businesses unless the government provides additional help to accommodate this increase, and which this could in turn lead to job losses. Lastly, what is permanent planning for businesses? So Keir Starmer has promised not to increase the VAT rate from 20% or the corporation tax rate, which is currently capped at 25%. Corporation tax has only recently been increased from 19% to 25%, so further rise would be unexpected at this time. However, they have said that the UK's corp tax rate is the lowest in the G7, and they will act if other countries' tax changes pose a risk to UK competitiveness. So basically, if another country in the G7 reduced their corp tax rate, it's possible we would also do so, but don't hold your breath for this to happen. Another reform they've got in the works is to the current business rate system. Their aim is to raise the same amount of revenue as the current system does, but do it in a fairer way to level the playing field between high street businesses and online giants. At the moment, businesses are charged tax on their properties such as pubs, warehouses, factories, shops and offices based on how much annual rate could be charged on the premises. The issue is that this makes it cheaper for businesses to move away from physical shops and go online, which is part of the reason why so many high streets are dwindling. Labour have not confirmed the specifics of what will replace this system, but we should find out in the next Parliament. So there you have it, a comprehensive look at the upcoming tax changes under the new Labour government. It's clear that their focus is on creating a fairer tax system and supporting workers' rights, but these changes are sure to stir up a lot of discussion. We will be here to break down what they mean for you as they come into effect. But thank you for tuning into our channel, and do not forget to like this video and make sure to subscribe for more updates, and we will see you in the next video.